So today there is a 3.3 billion in 91-day B and 16.9 billion in 182-day B and 107.9 364-day B. So we expect the stop rate to be maintained at the previous auction of October 31st, 2018. The stop rate on 91-day B is expected to close at 10.9. At the previous auction, the 182-day B stop rate was 13.49. So we expect maybe a marginal decline in the stop rate on the medium term. So on the 364-day B, we expect the rate to be maintained at 14.4. And tomorrow we expect a normal auction as well.
Okay, now for bonds, let's go to the bond market. Last week, we did see bearish trading at the bonds market, and we saw an uptick in yields across most maturities, except for the 2036 bond. Now, some traders have told us that some of the factors responsible for the continued bearish trend at the bond market is due to including uncertainty about the direction of yield and expectations of a hike in inflation. What are your thoughts or perspective on that?
The bearish sentiment that we witnessed in the bond market is, next week there is the last MPC for the year, so there is a kind of speculation as to maybe what the MPC decision will be, whether the MPR will be maintained. So, and given the bond auction of 115 billion next week, so the expectation is that the yield will increase marginally by at least 30 basis points across the majority on offer.
Okay, let's move over now to the currencies market. We're seeing oil prices steadily declining off the year high of over $80 per barrel down to around $67 per barrel now. And I know that the CBN, despite all of this, has still been able to provide ample supply at the FX markets, particularly the I and E window. What can you tell us in terms of about how liquid that market is and the ability of the CBN to continue to provide FX?
Okay, so at the high and E window, what we have seen is improved liquidity, and this is attributable to the effort of CBN. The rising yield in fixed income security, we've seen the internationals, there has been an improvement in inflows from the offshore, and currently, transactional has been executed as 363, 364 levels, unlike what we witnessed the previous month, where transactional were executed as high as 365.8 level. But currently, we are seeing transaction at 360, 363, 364 level. And despite the declining oil price, CBN has been able to sustain its intervention. Last week, it injected over $237 million into the system. On Monday, it injected about $210 million into the system, and we expect another injection of over $320 million into the retail SMI segment of the market this week. So we don't see anything that will maybe distort the CBN ability to intervene in the market. The decline in oil price is not going to affect the ability of the central bank to intervene in the market because we have seen improved liquidity, and the CBN has sustained the intervention. At the inflow in the high-end market, we've seen improved inflow from the exporters, and month to date we've seen the decline we've seen in reserve is about $304 million compared to the $2.3 billion we saw last month. So with the effort of CBN at maybe making it attractive to investors, so what we have seen is we've seen improved inflows from investors. So CBN ability to intervene in the market cannot be stopped given the decline in oil price.
Okay, well, I guess investors. That's obviously an indication of very strong confidence on the part of the market and the CBN's ability to continue to provide the FX. Now, for your forecast for the rest of the week, I know it's midweek. What are your forecasts in terms of how the fixed income market trading for the yield curve? What do you think? How do you see that playing out for the rest of the week?
Okay, for the rest of the week, tomorrow we expect a normal maturity of about 423 billion into the system. So we expect CBN to conduct a more auction of about maybe like 500 to 600 billion naira. So we expect rate in the FS market to remain relatively stable. And on Friday, we expect a result of retail SMIs. So we expect rate to be stable, and in the fixed income market, so we expect the bearish sentiment in the bond market to continue.
Okay, Bosun.